Alright, so as someone who has started investing around 3.5 years ago, but didn't really take it seriously until last year, this is the exact video that I wish I saw at the beginning. This video is not financial advice, and this is just something that has worked for me and is something that I will follow in the next upcoming years as well. So let's get right into it. Before even considering investing, I would say there are two important points to touch on. Number one, I would recommend having an emergency reserve. So what's usually recommended is you have around 3 to 6 months, maybe more, depends on your situation, of your monthly expenses saved in a savings account or something like that, just in case when some like unexpected situation happens. And that's not only good to have like as a general rule as well, but also because in terms of when something unexpected like this happens, you actually don't want to be forced to take the money out of the investment, because at that time maybe the market is not doing as well, and so you're actually going to be forced to sell your stocks at a lower price, which means less return on your investments, or even negative return in the worst case. And the second thing I would say is not having any high interest debt. So especially debt that will outweigh the benefit of actually investing. So in that way, it's sort of like trying to fly against the wind. Now that's out of the way, I actually want to talk about why investing is really important, and something that I wish I heard before I started myself. So number one reason is actually beating inflation. So money loses value over time. You know this really well. And the prices of items, for example, in the supermarkets are just growing. So one of the worst things that you can do is actually just keep your money in cash lying around somewhere in your apartment or something. One way to fight against inflation would be to have the money in a high interest savings account. However, the interest rate there is usually just enough to battle the inflation, if even. So by investing, you can actually beat the inflation, and on top of that, actually even gain some money. Another big reason I would say why investing is really important is I think it teaches you a lot about finances, and it makes you a bit more conscious about where your money is actually going. So yeah, overall just really helpful in terms of like developing good financial habits, I would say. It might teach you how to budget a lot more. And also I think it's really important because I think it's one of the simplest way of actually building real wealth. So I recently read a book called The Almanac of Naval Ravikant, which is really popular. And he talks about these 3 types of leverage to actually building wealth. And yeah, one of the leverages he mentioned there is the capital, aka money. And one of the ways you can leverage your capital is actually investing. At the beginning, it might really be hard to see the power of compound interest. But if you look at it from a very long-term perspective, you can actually see its effect. The key thing from the section of the book, I would say, is that you're most likely not going to get wealthy by trading time for money. There are just not many jobs that are so high in salary that it would just lead to financial freedom itself. But what you can do is actually investing. And another big thing that investing has going for it is, I would say, it's as passive of an income as it can be, meaning that you're just leveraging your money to make you more money with like almost no effort on your side necessary. Alright, so now that I've talked about why I think it's really important, let's actually talk about the strategy that I use right now and the information that I wish I had when I started. It's actually quite funny because I think that investing is like one of the rare areas in life where actually the simplest strategy with almost no effort required is actually the optimal one. And I'm talking about for most regular people. I'm not saying that there are not traders that can actually have a lot bigger gains than this. I'm just talking about a strategy that will work better for most people that did not spend a lot of time like studying the market. So when you buy a stock, what it essentially is you actually own a very small piece of the company. And so if you own a piece of company, you're at some risk of the company, for example, going bankrupt or the stock actually losing its value. And so the key thing here is you actually want to diversify your investments, meaning you want to own multiple of these companies so that in a case if one company's value goes down or it bankrupts, you're not going to take that much of a hit, and that maybe the other companies that you're invested in that, for example, did really well in that period of time are gonna actually outweigh the negative of that one single company. And so the easiest way that I do this is I invest in index funds. Those are funds that follow an index of a market. And for me personally, I invest most of my money into the index fund S&P 500, which will like split your money into the top 500 companies in the US. I also do this mostly because there are actually like studies showing that, for example, this index fund S&P 500, I think there's like data showing that it outperforms around like 80% of actively managed funds. And on top of that, like most of the traders cannot outperform it as well. Another key strategy that I use is I invest for the long term. The longer you invest, the better your return on investment. And again, there's like a lot of data supporting that just investing for a really long term has like very low risk. I would say that if you need to use the money in like the next 3 years, it might not be a good idea to invest such money because you might actually be unlucky and catch the period where the market is not doing so well and you're going to be actually forced to sell at a loss, which is something you want to prevent. So yeah, just getting into the mindset of just investing the money that you're comfortable with, having in the market for like more than 5 years is crucial here. Another reason why you want to invest in a long term is that's where the most benefits are going to be, just letting the compound interest do its work. And when it comes to the compound interest, at first it's gonna feel like really tough. It's almost like a flat line. But if you look at the graph of the compound interest in a long term, you're gonna see that after some time, it's gonna gain a lot of traction and it's gonna like snowball. So like the basic example of compound interest is you invest $100 and so after a year you might get like a 10% return on your investments, meaning that you end up with $110, and the next year you're gonna gain 10% on that $110 though, so it's gonna be $11 compared to the $10 the previous year, and so on and so on. So the gain each year is actually getting bigger on its own. One more reason for investing in a long term, there might be like a lot of other benefits as well. So for example, in the country that I live in, there's something called the time test, where actually after 3 years of your investment, you don't actually have to pay any taxes on the profit. And that can make a big difference after investing for a long time. Another big thing that I started doing is I actually automated everything. So there's like this saying of pay yourself first, which is really helpful, I would say. And what it basically means is after you get your income, which is most likely gonna be your salary, you just wanna pay the rent, your bills first, and put the money into investments, a predefined portion that you set up, and only after that you can spend the rest of your money however you want. And so the way I automated this is every single month, after I get my income, the money is automatically gonna be transferred to my investment account. And you can actually take it a step further there as well, which I've done. And a lot of these apps actually allow you to also automate the actual investments itself. And so after the money goes into my investment account, it's also automatically invested into the stocks that I've picked. And so this basically means that I don't have to spend any time on the investment, and it's just all being done automatically. Now, I still open the app and check the account like almost every single day, and that's just, I think, an obsession of mine. I guess it's just something that I really like to do. And by investing every single month like this, you also implement something that's called dollar cost averaging, which basically means that by investing regularly like this, you can buy the stock at a high price, the next month at a low price, the next month at like a middle price, and so it's just gonna average out. And so you just have a bit less chance of buying the stock at a wrong time. So you just heard me talk about the investment strategy that I use and why I think investing is important. And now you might be thinking, how do I actually start doing this? So a couple of tips that I would just give myself back when I was starting. First of all, it's super simple. Today you can just do everything online. There are many apps that you can use. I use the app Trading 212. You can just choose based on your preference. I would say two things to look out for. You actually want the broker to be popular and have a good reputation. And the second thing is I would focus on some broker that has low fees as well, because these can add over time. And one thing that I was struggling with personally, and you might be struggling with, is I had a very big fear of just losing the money that I put in. And so in that case, what I would say is just start very small. Start with an amount of money that you are comfortable with losing and that you don't actually need in any form of way. And that's exactly what I've done. I've invested just a small portion of my money, and at first it was actually working great. I was at a gain, but after some times it actually dipped down and I was in the red for a couple of months. And at the time, I actually didn't invest. But that did teach me an important lesson, and that is to just trust the market over a long period of time, because I actually left the money in there, right? I think the worst thing that you can do is panic and sell your investments. I actually kept the money in there, and after some time, it went back up. And now all of my investments are actually in the positive numbers. So yeah, if you just diversify and invest in good quality companies over a very long period of time, the risk is really low. And it's funny looking back, because at the time where I was actually in the red, those are the better times where you should actually invest more of your money, because you're buying the stock for a cheaper price, right? But I think it's just something that you have to go through to sort of shift into the investing type of mentality and to actually get rid of those emotions tied to your money. All right, and to summarize everything, the number one thing I would say is just start as soon as possible and as small as you are comfortable with, especially if you're on the edge about investing. Number two, I would focus on diversifying my investments and mostly investing into index funds. And number three, just don't underestimate the power of compound interest. When talking about compound interest, I also really recommend playing around with the numbers on one of the sites. I will link the site in the description. And yeah, just looking at the graph and playing a bit with the years of investing and actually looking at the graph. So yeah, I would just say start very small, do it as soon as possible, and just get into the habit of it. So yeah, that was everything, and see you in the next one.